What's up, bulls? Are you wondering what the best stock to buy is? Maybe you're asking yourself, what is the current situation of the global economy? Or just thinking about whether we are in a deep recession or not. Good for you. You are in the right channel, because that is what we discuss in Stockologist. If you're new, hit the like and subscribe button, and let us start the discussions. This video will walk you through each industry, show you the best stocks to invest in, and explain why we believe those stocks will outperform the rest of the market. We're not just looking for stocks. Instead, we want the very best internet stock. So for the first one, this one was a piece of cake because it involved Alphabet shares. The ticker symbol GOOGL dominates the web search, even in the wake of the loss of advertising. It is difficult to dispute the company's dominance on the internet, given its market share and the network effect it creates across YouTube and its Android ecosystems of apps. This effect makes it difficult to compete with the company. The company's revenue increased by 13% during the previous quarter, and it is anticipated that this growth will continue through the end of the year. Even though growth has slowed down, analysts anticipate that the company will increase its earnings per share by 16% over the course of the next 3 years. In addition to its growth, Google's profitability is an impressive aspect of the company. The operating margin is now at 30%. Compared to 22% last year. I see hidden value here. The primary search, cloud, and YouTube business sectors are supported financially by the purchase of shares. I don't believe the market has considered Google's ride-hailing service or any of the company's other notable projects. Therefore, you're purchasing Waymo, DeepMind, and Calico, an organization to increase the average lifespan of humans. These search and YouTube perks are similar to winning a lottery. Despite the fact that its valuation has been consistently low for the past several years, an examination reveals that the decline this year is the steepest since 2014. The price-to-sales ratio that analysts have calculated is 151, which is the lowest since 2014. This represents the analyst's long-term stock price target in USD for the following year. You might also want to check out addition to the stocks available on the internet. Industries include consumer staples, technology, and financial and other business services. This is extremely important because the same economic forces that drive the market are also responsible for the returns on stocks in each sector. An analysis of the performance of stocks from the beginning of this year revealed that 9 of the best performing stocks in the largest corporations are related to the energy sector. Because they ignore sectors, many portfolio managers struggle to outperform their benchmarks or the market. This year's tech stocks are likely the best ever. We are maintaining those sector weights in the index because they make up 28% of the more extensive stock market index, and 140 of those 500 stocks are from those sectors. This is because we target the best percent of the stocks, which are the top stock picks from the stock market index. Let's go over our next index stock, Comcast primary ticker. Although CMCSA is not an internet company, its future could be bright. Comcast's market share has grown from 52% a few years ago to its current level of control over 2/3 of the industry. It is light years ahead of its next closest competitor. This aspect of the company contributes to the cash flow growth for cable and streaming services. Over the next 3 years, it is anticipated that the company will be able to parlay sales growth into annual earnings growth, thereby achieving excellent profitability and pricing power. Comcast is trading at a very low price despite having the largest market share in its industry. Based on its price-to-earnings and price-to-sales ratios, the stock is currently valued at its lowest level in over a decade. This stock won't make you wealthy, but it is currently in the lead in its industry, so you shouldn't ignore it. And going back to our stocks, this upcoming stock will be contentious: Meta Platforms. You can laugh all you want, but statistics between Facebook, WhatsApp, Instagram, and Messenger don't lie. While there is much overlap, the company has reach unmatched by any other platform, with over 7 billion active users. I bet it is far ahead of the next largest competitor. The Apple privacy changes were a jab that rang Zuckerberg's bell, and recession fears that caused a drop in ad spending was a right hook out of the left field. However, these are both short-term issues. Facebook will discover a solution to the ad targeting issue, and ad spending will eventually soar along with the economy. shares are down 20%, and people are debating that platform's viability for the first time. But tell the truth, have you decreased your time on Facebook compared to before? Even if some users migrate to different platforms, I don't see the need to switch. Facebook now has 3 billion active users every single month. Meta has a broader variety of platforms than any other social media company, including Facebook, Instagram, WhatsApp, and Messenger cells. This is something that no other social media company can claim. It is anticipated that profits will remain stable this year, but they will increase to billions of dollars over the course of the next 3 years. Furthermore, profits are anticipated to increase even more quickly at an annual pace to 16.86 cents per share through 2025. In addition to the fact that this company dominates the market, the company is growing at a rate that is undervalued in the market, and the share price here is 3.1 times the company's sales. Despite all the negative information, analysts continue to have a target price of $244 per share, or an increase over the coming year. This would be the highest in the company's history and a 5-year average share price discount. And I guess that is the end of this video. Comment below what you think of our topic. Let's start a discussion in the comment section. If you liked this video, please like and subscribe. And don't forget to hit the notification bell. This will help us at Stockology grow our channel even more. Thank you for watching, and we'll see you in the next one.